What's going on, guys? Happy Independence Day to all my fellow Americans out there, and even to my non-American friends. Happy independence, because one day we will be reaching financial independence. But guys, there are gonna be better days ahead. I truly believe that, and it's partly because YieldMax has just announced their dividends for the month of July. This is for their trading that happened in June. It gets paid out in July. So let's see how juicy some of these dividend payments were. So the distribution rate, this is the distribution rate of the annual yield an investor would receive if the most recent distribution remained the same going forward. So TSLY, the YieldMax option income ETF that gets talked about the most, paid a super juicy dividend this past month of $1, and that would give them a 71% distribution rate. That is absolutely straight juice. But of course, a good investor knows a 71% yield is actually quite suspicious. So let's keep looking at these. I'll talk a little bit more about why that might be a little bit too good to be true in a little bit here. So OARC, the Cathie Woods YieldMax one at 27%. NVIDIA, man, if you thought 71% was ridiculous, they have a 102% yield for NVIDIA. Amazon YieldMax one is 40%. What other interesting ones here? Oh my gosh, Coinbase one is 90%. And then we have Misty at 101%. I have to look into a little bit more about what that consists of. The Bitcoin one is at 83%. And then this one is very interesting. Crash is at 63% or 64%. And this one actually shorts Tesla. It shorts it indirectly. I thought this was very interesting that YieldMax would come out with a product like this, because they have one that does synthetic covered calls on Tesla in TSLY, and now they have one that shorts Tesla in Crash. So generally one would be if you were very bullish on the company, but then Crash would be if you were very bearish. Yet I'm seeing some popular YouTubers owning both, and I'm very confused on what exactly they think they're doing. Like, do they understand how investing works or the strategy behind that? Very curious to know what they're doing. So let me know if you understand what they're trying to do with Crash. If there's other people in the community that maybe can explain that to me. So that is Crash. Let's talk a little bit more about TSLY, though, everybody's favorite. Why did I want to talk about TSLY? Well, Tesla has had a great couple weeks recently. They actually just posted their second quarter vehicle production and deliveries report for 2024, and it was great news. So they have actually ballooned up 40% in the last month, and they are now back up to being a $700 billion market cap company. Actually closer to $800 billion. So Tesla has really had a good past 30 days. Let's just talk a little bit more about Tesla to understand why this is the case, right? So when they reported this very strong vehicle delivery results from their second quarter, that actually lifted the share price targets of many different analysts. So a lot of people, they have a lot of faith in these analysts. They think they know what they're talking about. So if one of these analysts raises their target price, a lot of investors are going to pour more and more money into Tesla. So you can see their total deliveries in Q2 of 24 was 443,000. Total production was 410,000 vehicles. So again, guys, they're doing very good. They also had record deployment of their energy storage products. So Tesla does more than just make cars. That particular segment was up 129%. Now, many think of Tesla as a car company, but Tesla's technology, it doesn't just stop at autopilot. The firm is notable for investing and developing robotics manufacturing solutions as well. So those robots that you see in all those horror sci-fi movies, yeah, Tesla is making sure that becomes a reality one day when those killer robots come back to kidnap us. All right, so let's go back to TSLY for a second. So just reading straight off their own company website, right? So investing in the fund involves a high degree of risk, and more importantly, the fund strategy will cap its potential gains. If Tesla shares increase in value, the fund strategy is subject to all potential losses if Tesla shares decrease in value, which may not be offset by the income received by the fund. Why do I keep mentioning this, guys? Why do I always, in my videos about covered call ETFs, I always try to warn people about this particular part, that the fund's strategy is subject to all potential losses, but only some of the upside. And I think this past month or this past week is a perfect example of seeing NAV erosion fully play out before our eyes. I know, so many of you just want cash flow. So why are you telling me about the risk? Well, guys, let's look at Tesla's stock price. So in the past month, they are up 41%. In the past 5 days, this has been a stellar week for them. They are up 26% in the past 5 days. That is incredible. So you're probably thinking, oh man, TSLY, they must have had some juicy returns as well in this past week and past month. Well, the answer would be that you are actually partly correct. TSLY has had a good week, has had a good month, but we can see in the past 5 days, TSLY is only up 10.6%, while Tesla is up 26%. Tesla is outpacing TSLY by over double. When we look at the past month, TSLY is up just 17%, which again is still very incredible because we're still getting some dividends, but Tesla, the stock, is up 41%. Guys, how could this be? What's going on here? Well, remember, TSLY generates monthly income by selling and writing call options on Tesla. So weeks like this, months like this, when Tesla does amazing, it's gonna stunt the total returns of TSLY. But the kicker to this, the caveat, is that when Tesla goes down, like it does in moments like this, right? If you look at April 12th on TSLY's chart, they also go down. So what exactly is going on here, guys? Remember, the covered calls that TSLY writes, that's what allows them to get all these juicy dividends, to get those juicy premiums, but they get all the downside risk that we just saw. So they're only going up a little bit every time that Tesla goes up, but they're going completely down with Tesla every time Tesla goes down. So you can see over long periods of time, that's gonna cause NAV erosion. Now, a lot of people in our community, a lot of people on YouTube, they hate to say this word. They will try their best to persuade you that this is some sort of myth, that NAV erosion doesn't exist, that it's some sort of make-believe term that people are trying to fear-monger with. But I'm clearly illustrating to you what can happen over long periods of time, especially with a very volatile stock like Tesla. So Tesla has a 5-year beta of 2.32. So that means it's nearly 2 times as volatile as the overall market. Again, over long periods of time, that's when you'll see this NAV erosion. I'm literally showing it on the screen for you guys. Remember, the stock market doesn't always just go up. It's gonna meander. It's gonna go up. It's gonna go down. But when you're only getting some of that upside over long periods of time, that NAV erosion, it's gonna happen. It's not a myth. I don't know why people in our community still spew that NAV erosion is a myth nonsense. For those getting juicy dividends, those juicy premiums, it comes at a cost. And this is exactly why TSLY had to do a stock split earlier this year. The price just kept going down and down and down. TSLY is actually down a whopping 57% all time in the year and a half it's been out. But some of you will be quick to say you have to look at the total return. don't just look at the share price, look at the total return, and we will do that. Now, a viewer named Lee, he wrote me in the comments asking if I could explain to him what total return is. Lee said he didn't know what that was, and I said, no problem, I can explain it. So total return, it takes a look at the stock price movement, whether that's capital appreciation or depreciation if it goes down, plus the amount of dividends. Surely, if we take the juicy dividends that TSLY has paid all this time and compare it to Tesla, TSLY has blown Tesla out of the water, right? I mean, we're getting a 70% yield, and it's been out for a year and a half. Well, not exactly. Sorry to burst your bubble, guys, but TSLY has returned a total return of just 3.79% since inception. Well, Tesla in that same period of time is up 26%. This is with dividends included and reinvested. Without dividends reinvested, TSLY has done almost absolutely nothing. An investment in them has returned next to nothing. Taking into consideration opportunity cost and how great the stock market has done in that time span, I'd be left very disappointed. Now, the ex-dividend date, that's when the share price will actually fall, so expect TSLY share price to continue to go down. We just have to hope that TSLY will eventually recover. Now, I'm not saying that these funds can't be profitable. After all, the last time I checked, YieldMax, which is kind of like all these funds put into one, it's actually been beating the overall market. Now, over long periods of time, I am almost certain that will not be the case. The stock market, again, doesn't just always go up. And I'm also not saying that there's only one way to invest or even one correct way to invest. There's not. And I totally understand what people have written to me in the comments that, hey, I'm only trying to showcase one way of investing. And that's true. There's multiple ways to invest. So don't let me discourage you from your investing goals. I'm just sharing my personal opinion on why I think some of these yields are absolutely ludicrous and not going to make people money over long periods of time. Again, on this Independence Day, I had to explain this NAV erosion concept because Tesla's recent performance has just been too juicy not to enjoy. Now, I know some of you in the comments are going to be angry. You don't want to hear this, but just know this. You need people like me. You need people like me so you could point your finger and say, that's a bad guy. What are some income ETFs I really love? Check out this video right here. You'd be surprised that there are some double-digit yielding ETFs that I actually have. Want to see my full $200,000 portfolio that I earned at the age of 27? Check out the link below. Thanks to all my Patreons. Join the Discord to talk to other dividend lovers. My videos are always found in podcast form under the Collect Cash podcast name.
Dissector, you are an idiot.